Good day. Ira Epstein with your metal wrap-up, and this wrap-up is for Wednesday, and this is the 30th of March, 2022, time 5:17 p.m. Central Time. You know, it's one of these crazy days. I kept thinking this was the last day of the month. I don't know why. I know the poem. I shouldn't have done that all wrong. It's too funny. I was looking for certain things to happen today, and they'll all happen tonight and tomorrow. All right. So when we look at the market, we're in schizophrenia time. You do understand that in the high volatility time. And the reason is one day we have a peace talk going on in Turkey that looks good. That evening, the bombing continues, and there is no peace talk that looks that good. In fact, Russia's saying, that's not what we said. So you don't know what the real world is. We're not going to know until after the fact. You have to assume that. But you watch what happens and you get a feel. So redeployment of troops is probably going on. Now, if you're looking at the economic U.S. data, it's all pretty darn good. Our GDP numbers came out, I thought, stellar. If you're looking at regional activity indexes, they're good. If you're looking at the JOLTS number, which is the jobs, they look very good. We're going to get unemployment numbers tomorrow, and then we're going to get on Friday the all-important jobs data. They're looking for about 490,000 new jobs. So, down right now in the gold a little bit, silver backing off as well. Copper is just sitting here in the 475 region. The U.S. dollar got hit as most of the currencies rallied against it during the day. You added another $3 in the energy markets into a barrel of energy there. And we had a rally today in the bonds and the notes, and it looks to me like more short covering than anything else. When I look at the gold chart, on a weekly basis of closes only, you're down 1.1%. You made a peak and you've been gradually, setting the market back. Some traders think it's going to get back down to the 18-day average of closes. When we look at a June gold contract, you can see how the market probed this low 2 days ago. Now we're getting the little bit of a bounce off of that, but we don't have a trend. What you have is a higher high as measured by the swing line, and that's what this brown line is. What the brown line does is there's 5 variables. I wrote the study, so I think I know it backwards and forward. There's 5 studies. You look to see, did you make a higher high, lower low, an inside day, or do you have a higher high or a lower low day? Okay, outside days up and down also come into play. And in the case here, I'm looking to see, do we get the classic, what everybody talks about on financial TV, and if you go to school, it's the first thing you learn if you're learning charting. A downtrend has lower highs and lower lows at the core of it. An uptrend, higher lows, higher highs. There's many other variables that come in, but at the end, that's what you're looking for, and you're not trending. You have a higher high and a lower low. The market is trading underneath the 18-day average of closes in red. That's what I call the line in the sand. Markets often go to that number and fight to see what's going to happen. And all that's happened in gold, I'll call gold so far the great disappointment of 2022. You're going to say, why? Let me answer it quickly. Inflation, runaway, war in the world, threats of nuclear, pushing the button by Putin, and gold can't rally. I am not impressed. Where did the gold go to this week? If you've taken the enhanced Bollinger Band course, you learn the importance of these Bollinger Bands, and they are just so important on a chart, one of the most important things you can run into. So when I look at them, I learn, I teach from that. And when you get down to them the first time, what do the pros do? They take money off the table. Now, you're going to say to me, Ira, if you went up there and I took money, I missed all that. It's not what I'm saying. There's other ways. If you get an embedded reading, and I teach this within that course, you treat it a different way. Do you take all the trade off or some of the trade? If you want to learn about it, just take your cursor, move it up right now to the top of this. It'll take you right to the enhanced Bollinger Band course, and you can learn right there. Gives you an idea of all that's going on. All right. You have momentum up, the bias down, and no trend. I don't see anything to do in a market like that. In the gold-silver ratio, when prices are over the 18-day average of closes, it means the bias is up in pricing. If the bias is up as these numbers go higher in a perfect world with no commission of any type, This tells you how many ounces of silver you need to get 1 ounce of gold. The higher it goes, obviously, the lower in silver value is against gold. If you look at the silver chart, here too you have a higher high, lower and low. I'm going to go back to the enhanced Bollinger Band course. You came right down here, and you had the double whammy. You had the 200-day average with it. That's where I think the pros covered their money. I said that to you last night. You had a good bounce today off of that, so I feel good in what I'm saying. I don't see a trend. Now, in the copper market, you have a lower low, higher high. If you take a look at today's action, you got up to 482.80, the Bollinger Band 483.16. Pretty darn close, I think you'd agree. You could turn back from here, could get back to the 18-day average to try to figure out a better way to catch a trend in it. You're overbought as well. Stochastics measure momentum. They can embed, which means they convert from being overbought to locking in a trend, and they tell you danger zones and what the market's doing. Keep in the back of your mind, momentum typically moves ahead of price. So it's a warning sign and often a very good one. I view either number being over 70 is overbought. To be embedded, they have to get over the green line, which is the 80 level, as a bullish part for several days in a row, then they've locked in. In the platinum market, I see a downtrend. Lower highs, lower lows. The market got underneath finally, and you can see this. This was the battleground, the 100-day average. I think the pros came out right where I'm pointing to you, and the market drifted. Now the market's reestablishing a downtrend. It's not embedded, though. It's trying to, but it hasn't done it. I'm going to just call the market oversold, hit some downside targets, and now it's looking to see what to do next. In the palladium market, I mentioned to you right through here. Let's take you back to Friday. On Friday, I would have been saying to you, we did on Friday, if you'll recall, the weekly charts, not the daily. But here you are with the trend down, bias down, very oversold. If you hit this whole region, I think the pros are running for the hills. Why would they stay? You don't have the embedded reading. Market hits that number. All of them come Monday, Tuesday. You start your bounce, and this is exactly where you're at. To be expected. This is not a turn of trend, but you're refusing to stay embedded. Now, let's take a look. You need 3 days in a row to be embedded. Watch. Embedded. Look at how many days you're staying there. So if you get down to this number part, this right there, do you think they're taking all their trade off or just part? Take the enhanced Bollinger Band course. It'll teach you just how they do it. Tonight, you got to be worried because you're losing the embedded reading. You didn't lose it during the day on Wednesday. You're losing it tonight. Intra-evening, it's the first bounce. Let's see what the market does come the morning, but it's certainly a sign not to be getting more shorts put on at this point in time. In the dollar index, I made a prediction to you yesterday, and I'll stick with it. I think the market's going to do this. I think I even did this on TV, waving back and forth in there. We'll see. That's what I think it's about to do, just swing back and forth in the Bollinger Band, void of a trend right now, and probably get close to doing that in the euro. So again, if you'd like to learn more, especially about Bollinger Bands, follow my finger. Just take it. Move your cursor right up here. You'll see the icon. Take advantage of it. I'm Ira. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.